Tuesday, December 3rd, 2019, MONERO 64, home of alternative economics and contrarian views. I have to say, from what is happening in the world, geopolitically, economically, monetarily, trade-wise, I personally haven't seen such events in my adult life. Maybe early 70s, it was similar, but I was still a child. I did hear the news, but I didn't digest things as I do now. And I think we're coming to some kind of major event for the world economy, for the monetary system. And why do I say that? Well, just all the mayhem, disorder that's going on in the system, all the conflicts. Yes, it could be engineered. It could be a way for the bankers to clean house, right? And they use the trade disputes as an excuse. They use climate change, whatever, right? But yesterday I came to the realization that things are very near, in my opinion, the end game. By the end game, I mean the end game for the system we've had since World War II, the petrodollar, Bretton Woods, before that, of course, system where the dollar is king, where the central banks, the Federal Reserve, Bank of England are in charge, right? I think we are at a juncture where things are getting very interesting. The other thing I want to talk about as well that I think is kind of showing signs, and I've got no proof of this, but yesterday I noticed that U.S. Treasuries, the 10-year yield was spiking higher quite dramatically. It was up about 8 basis points at one juncture. And despite the fact that the stock market finished down quite a bit yesterday, we saw the Dow drop almost 270, right? Just under 1%. We saw the 10-year yield actually go up 5 basis points. Normally, with a move like that in the stock market of late, you see yields drop and they went up. Why is that? Well, it could be China, in my opinion. It could be the Chinese threatening the U.S., or not really threatening, but playing their part on their side, right? In this trade war that's becoming more than just a trade war now, with the Hong Kong bill that was signed into law, right? Some people reacted prematurely. Yes, just after that bill was signed by President Trump, because the Chinese didn't react right away. I think that's a mistake to say the Chinese are not going to do anything, right? They've come out already yesterday, I think, with a few announcements. They wouldn't let U.S. naval vessels into Hong Kong anymore, and a few other things. I think the Treasury situation is one of their big weapons, or the big bazooka, so to speak. And why is that? Well, as you can see here, I'll show you the biggest foreign holders of U.S. debt in one chart. This is from howmuch.net. There you go, China. They've got over 1.1 trillion of U.S. treasuries. They're the biggest holders, percentage-wise, 17.3%. Yeah, Japan, they toe the line, right? They're going to keep their treasuries. But look at Hong Kong as well, 3.2%. So you add that up to the China total, seeing that Chinese are very unhappy with what's going on in Hong Kong and what President Trump has done, and the Congress, right? And here I'm not trying to judge anyone. I'm just talking about the numbers. You add that up, you got more than 20% of treasuries held by China, right? In Hong Kong is a semi-autonomous region, but it is part of China, right? So why is this important? Why is selling treasuries a danger to the system? Well, because you have to think of treasuries as the risk-free asset. It's the asset that all other assets like stocks, corporate bonds, commodities, derivatives, everything is priced off the risk-free rate of return of U.S. treasuries. So if that rate of return, risk-free rate of return, starts going up, yields start going up, that means treasury prices start going down, the prices of all other assets have to go down so that their returns match treasury returns. That's why it's so important. And we could see a complete meltdown in the markets because of that. And am I saying I've seen the Chinese sell treasuries? No, but just the reaction to the markets yesterday, the fact that yields didn't go down seems to me a problem. So I think we need to keep an eye on that. So earlier in the video, I talked about how things are getting so crazy, and I think they are. You had Wilbur Ross coming out as well, giving the Chinese a deadline. I think it was December 15th. Wilbur Ross says December tariff hike likely without China breakthrough. That just came out yesterday, right? President Trump announced he's going to reactivate tariffs on Brazilian and Argentinian aluminium, or aluminum as the Americans say, and steel, right? He's unhappy about their currencies depreciating. Brazil, of course, has cut rates a few times this year, and that's put the real under pressure. I've spoken about that. The dollar is at near all-time highs. Argentina, of course, they had problems with their IMF loans, and the currency dropped 60%. So, but the Fed, at the same time, President Trump is also tweeted that we need to, the U.S. needs to, especially the Fed, needs to play the game of cutting, of accommodation. He wants the dollar also to come off. So this is like a run to the bottom of all fiat currencies. That's the problem with fiat currencies. Once currencies start trying to, or countries start trying to devalue their currencies, it's a game to the bottom because they can only devalue against each other. So if the dollar devalues too much against the euro, then the ECB and the Europeans will try to devalue, play the game as well. It's a non-ending game. And I saw this morning more news here that is disruptive for trade. It's not going to help the economies. I'm not saying that the reason the economies are slowing down in the world is just because of trade, but this, I think, will push the economies. And it's a good thing for the central banks. Why is that? Well, because it takes the spotlight away from them. It doesn't show that their policy of inflating the system with massive amounts of debt, trillions of dollars in debt in the last 11 years hasn't worked right. People are going to focus, they're going to blame these trade wars for it. Just like they did in the 1930s, they blame Smoot-Hawley. I personally don't believe it was just Smoot-Hawley. You need to read America's Great Depression by Murray Rothbard, where he talks about the loose monetary policy of the 1920s instituted by the New York Fed to help keep the British pound from going lower, right? To protect the peg that it reinstated after World War I to gold, the peg that they reinstated to the same levels that they had prior to World War I, which they couldn't hold. So yes, the general public is going to blame the trade wars for, I think, pretty turbulent times economically and monetarily. I'm seeing, in my opinion, right now. It's kicking off. So yeah, U.S., another headline this morning here in the FT, U.S. proposes 100% tariffs on French goods over digital tax. Trump administration targets champagne, handbags, on day of trade war escalation. So let's look at the markets this morning. I'm a little earlier. It's just past 7:30 a.m. London time. Of course, yesterday was a big move lower in the stock markets. The Dow dropped 1%. S&P dropped 0.86%. NASDAQ dropped just over 1%. Is this a top? We don't know. We don't know. Let's just wait and see what the markets do. I think that's the best thing to do. So let's have a look at what we're doing. Start with gold, as I usually do. Why do I always start with gold? Well, because gold and silver, in my opinion, have been the ultimate currencies, the ultimate money for thousands of years. And I think they're still very important. That's why I start with them. Spot gold right now is unchanged virtually. It's at 1462. Range has been 1460 to 1464. So quite a narrow range overnight. Spot silver is up slightly, half a cent, 1690. Range has been 1686 to 1695. The Dow future is up 30, up 0.1%, 27,824. S&P 500 up 4, 3118. The NASDAQ 100 futures up 8 points. So the markets have rebounded slightly, not much, 0.1% or so. Currencies, yes, the dollar got hit yesterday quite hard, especially against the euro, the yen, and the Swiss franc. The Swiss franc is looking very interesting. Not that I'm advising people to hold Swiss francs as protection, but the Swiss franc has been used as a carry trade currency. And what does that mean? Well, investors, speculators, even central banks, they've been selling Swiss francs, which means borrowing the Swiss franc, taking the proceeds in dollars and buying like riskier assets in dollars like stocks and other things. And that's kept the Swiss franc very steady, around 1-to-1 against the dollar for the last few years. What I think could happen if things unravel and these people who borrowed in Swiss franc to buy dollar assets. And why are they borrowing Swiss francs? Well, because you can get paid to borrow in Swiss francs in many instances. If this unraveling takes place, they're going to have to unwind their loans in Swiss franc, and that's going to strengthen the Swiss franc, in my opinion. So I think that could be an interesting foreign exchange trade for those of you out there who like trading foreign exchange. At this morning, currencies are a little steadier. Sterling is a little stronger, 0.1%, 129.15. The euro is unchanged, 110.77. This morning, the dollar is up slightly against the yen. It was down yesterday, I think over 0.5%. It's at 109.09. The dollar yuan is at 704, unchanged as well. Swiss franc unchanged. The dollar is 99.13 centimes. It's quoted in French francs, so the dollar is below one Swiss franc. Crude oil fairly steady. WTI is at 56.20, up 0.4. Brent is up a third at 61.03. Now finish off with the bond market, the 10-year yield here this morning. Let's see where we are. Well, it's unchanged. It's at 184, the 10-year yield. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.